Hello, fellow traders. 'Tis I, the Rumpled One. A lot of traders contact me because they're losing. They're not making money. They're not profitable. And they ask for help. And I try to make things simple for them, as simple as possible. Sometimes I give them little assignments to do, simple assignments, to see if that helps. And sometimes people think I'm crazy because of some of the things I post and some of the things I say in videos. So today's video is day trading with daily candles. Now, I'm sure once I put this video out, there's going to be a lot of reaction to, just how crazy is that? Well, there's a quote by Einstein. I paraphrased it, changed a few things. I am also aware that I do receive much criticism from the outside world for what I do, and some people actually get angry at me. But this does not really touch me because I feel that these people do not see the world as I do. Once again, I left off part of it and I changed a few words to make it fit. Because one of the things I've always told traders was to trade what you see. If you don't see what I see, you can't trade what I see. And many people don't understand what seeing really is. I'll ask them a simple question, such as, what do you see? And they'll tell me things like, well, price started here, it went down and hit some support, took off, hit some resistance. And I'm like, no, no, no. I asked you, what do you see? And then they'll look at me puzzled and they'll come back with something else. And I say, no. See, if you ask, say, a 7-year-old kid, what do they see? They'll say, well, I see some red rectangles and some green rectangles with some lines sticking out the top and bottom. See, that's what you see because that's what's right in front of your eyes. But traders have been trained with indicators and concepts such as support and resistance, supply and demand, time, etc., trend, and they then all of a sudden they can't see because they've got so many filters, so many concepts that they can't actually see price and what price is doing. So once again, this is day trading with daily candles. So if you started off with just a blank chart and you were going to trade, well, if you follow a simple rule of thumb, you only trade with the D1 candle color. As soon as the candle turned green, you would enter a trade long. You would buy. And as you can see, you would have had a nice little run if you stayed in the trade, especially if you popped out and exited your trade somewhere at the top. But people would say, well, that's too hard to do. Well, what's so hard about it? If so long as you're not colorblind and you can distinguish between red and green, you put up a daily chart, and as soon as you see it turn green, you would buy, and then if it turned red, you would sell. That's simple. Let's move on and let's add some horizontal lines and a gauge, my range gauge. So you can see here once again, if you were trading with horizontal lines, you'd see price drop down below 1.3600, and you know how much I like the 00 trades. So as price came back and reversed, I might have jumped in a little early, or maybe I just wait till it turned green, because it turned green at 136,005. So pretty much right there on the 00 line. And you could have made 10, 20, 30, 40, almost 50 pips if you would have stayed in the trade. This is simple. You could teach this to that 5, 6, or 7-year-old. If it's green, you buy. If it's red, you sell. That's not difficult. Not difficult at all. And the gauge just tells you where price is. It tells you the open, high, low, and close. It tells you the current range. It tells you the retrace percent for you fib lovers. So you can see, if I always make the bottom 0 and the top 100 like a thermometer. And you can see right now it's sitting at the 69% level. And the wick percent here is 30. The body of the range, the body is 63% and the tail is only 6%. But if you're not interested in wicks, bodies, and tails, you don't have to look at that. And the D1 average over the last, range average over the last 24 days was 59.99. So you can see the range did not exceed the average range. And close to open, we've got 33 pips. High to open, 49. Open to low, 3. High to close, 16. And close to low, 36. So you know where price is relative to these other points on the chart. Once again, on a daily chart. We don't need minute or hour, 4-hour. We can day trade using a daily chart, because we know if this is green, we are not going to go short here. Even though you could have made money going short here, candle's green, you're not trading against the candle. This is simple. Very simple. Could you lose? Well, of course, because you could have gone long here and then price maybe got to here and turned around and dropped like a rock. That's trading. Can't predict. Don't try to. But simple. It's very simple to trade with the D1 candle color. Let's look at this. One of the things I like to do is I like to use today's levels and yesterday's levels. Horizontal line levels. We've got yesterday's open. We've got yesterday's close, which is pretty much today's open. We've got yesterday's low, got today's low, yesterday's high, yesterday's midpoint, today's close, today's high, and this white, this is the weekly open, which is another trade I like. So depending on what time you arrive to the scene, maybe, I'm not sure because I'm not looking at a lower chart. But let's just say when you decided to turn on your computer and trade, price was here. Well, you've already missed these two. Well, when price got here, you say, oh, that's the weekly open. If I enter this trade long, since this is green, I could possibly make some money. And you see you got in around 18, 19, 20. You had about 20, almost 30 pips of profit there if you would have punched out at the end, at the high. And this is all using daily candles. And of course, you could have gotten in here and price could have reversed. In fact, we could change we can look at it on an hour chart and see what happened. And you see here, price tried it, failed, price rocketed, came back. Hopefully you would have exited before that happened, and then you got a second time to make even more money. Once again, using a daily time frame, because you would have watched this wick. You would have watched this body go up, come back down, then you say, hey, it's still green, it's moving it back up. Because, see, you wouldn't be distracted by things that you don't see. I know that sounds funny, but if this is all you're looking at, There's a lot you're not looking at, so you can't be distracted by what you don't see. And so you see, fellow traders, you don't really need a lot of fancy gizmos, and I get accused of making these fancy indicators like the multimeters and these gauges, but they're tools, and if used properly, they work. If you don't need them, you don't need them. You don't put them on your chart. You can go blank, go naked. I like to use horizontal lines, and as you can see, or as you saw, when I change a time period, these values do not change. Well, in this case they do, because I didn't set the indicator for D1, so let's do that. My period 1440, which is daily, and then you can see the D1 height was 136.24. We change this back, 136.24. So my fellow traders, it's possible, if you're losing, if you're struggling, and you're a day trader, give this an honest effort for a couple of weeks. Give it 10 days. See what your winning percentages are. Maybe if you only limited yourself to one trade a day, that might help. So you make sure you enter properly, and then you take profit, and then you're done for the day. 10 days, that's all I ask. And get back to me if you try this experiment. I'd like to know your results. And traders, as always, it's not what you trade, it's how you trade it. This is the TheRumpledOne, wishing you profits